So when should you sell a stock? It's very easy to know when to buy a stock if you've done your research and you really like the company, or if the price of the stock has moved to, let's say, a new high or it's hit a certain point. Very easy to know when to get into a stock. Very hard to know when you should get out because the stock can potentially be that that next Apple or Amazon that could go up 4,000%, or the stock could go up and then shoot down. So it's kind of hard to know. So the first thing you want to do is let's talk about when you should not sell a stock. So first of all, don't sell a stock just because it's down. If the company is fundamentally a good company, if it has good management, a good product, everything is going well, sometimes that stock is going to go down if the market corrects or the market crashes. Just don't panic and sell if the stock and the company, it's a good company. Because if you get shaken out, the market's going to recover and the stock's going to go back up, and then you're going to feel horrible that you sold at the bottom and you missed out on all that profit. For an example, Berkshire Hathaway, one of the most successful stocks that has made so many millionaires and decamillionaires and a couple of billionaires. In the past 50 years, Berkshire Hathaway has been cut in half 3 times. Most recently during the financial crash of 2008. And that is a stock that's had an annualized return of 25%. And you just imagine annualized return of 25% over 50 years. That's kind of incredible. So you don't want to sell a stock just because it's down. So one of the things that you should do once you buy a stock is write down your rationale, because selling a stock can sometimes be an emotional decision. So you just want to have the rational part there to counter any emotions that you may have. So, write down, buying the stock because of good management, they have this product, they have this advantage over the competition. And when you feel tempted to sell, read over the rationale and see if nothing has changed from your rationale, then don't sell. If you do feel, that somehow you have to protect yourself, then take some cash that you have maybe from your speculative side of your portfolio and find a sector short ETF that has a good negative correlation with your stock. So for instance, let's say you're long Apple and Apple is starting to go down because the Nasdaq's going down, then look at the short Nasdaq ETF. That's just a nice way to get some downside protection. You could even profit on the downside if you feel that you need to, even though I don't feel that it's really necessary. Another example of, holding on to a stock, Apple and Amazon, they crashed well over 50% during the tech crash of 2000. And then after that, they continued going straight up. They even, crashed again in 2008. Yet another example, Bitcoin crashed at 1.90% about several years ago. And, it went down, I think, as low as like $200, and now it's up to around $10,000. So this is the only 2 times I can imagine that you really want to sell a stock. One is if the stock is broken. If something fundamentally bad happened to the stock since you bought it, let's say the management changed and the management is not very good, or there's like bad accounting, you find out that their accounting was fraudulent or something like that, or if the company that you have has been disrupted by another company, that would be a good reason to sell. The second time is just when you simply want to take a profit. If you decide at a certain point that you want to take a profit because you need to buy something, or you want to redeploy that capital in something that you feel that's going to give you a better return, go ahead and sell then. But those are the only real 2 times. Don't sell just because the market is down. Don't sell for emotion because you're scared for emotional reasons. Okay, so I hope that helped you on when to sell a stock. All right, thanks. Bye.